back to accountancy class. Today we are in second chapter of your accountancy, that is theory base of accounting. So before going to the chapter number 2, theory base of accounting, let us recall what we discussed in the first chapter of accountancy, that is introduction to accounting. So what were the things we discussed in that lesson? We started with the basic term that is called bookkeeping, right? So bookkeeping is a normal method of maintaining the various books which helps for the recording of day-to-day transactions of the business concern, right? So for that reason, maintaining or keeping some books of account called bookkeeping. And coming to the bookkeeping, the next is accounting. So accounting is a series of activities, or maybe accounting is a process which includes from the step of identifying the transactions and ends with communicating the same to the different users of the accounting or users of the organization. There are many users, internal users as well as the external users, owners, shareholders, creditors, investors, bankers, government, etc. They are the different parties or users of the accounting information. Once the transactions are identified and processed into many steps like measuring, summarizing, analyzing, interpreting, recording, the later if the things being made ready and communicated to the different decision makers or users, then called accounting. Accounting, it has many objectives. There are many objectives to prepare the accounting. The thing also we discussed in the previous classes called objectives of accounting, right? In which that calculation of profit as well as losses, making of decisions, right? To know the sources of income as well as the mode of expenses, right? To judge the financial positions of the business concern. These were the major objectives of preparing the accounting work or accounting transactions, including that role of accounting we discussed, as well as branches of accounting. There are many types of accounting which normally prepared in the organizations based on the nature of activities. So they call branches of accounting, and also at last various basic terms of accounting, right? So accounting is a new lesson for you students, and we normally use many terms related to accountings. And what are the basic terms we use? The highlighted points we discussed in the last lesson, normally the last session, right? So that was the complete picture of your first lesson, means introduction to accounting, right? Here, before going to the problems or illustration part, we have one more lesson that is also theoretical part only. The chapter name is called Theory Base of Accounting, right? So let us start the second chapter in this video. Okay, so as I told you in the previous classes, accounting process or accounting work will be done or prepared by the organization with the different reasons, of which one of the best reason is called making available all the informations to the different users. Right? Who are the users? Just now I told you, owners, investors, creditors, or maybe the tax department, government, or different community, media, etc. They are the different users of the accounting information. As immediately prepare the accounting, it has to be disclosed or informed to the various users of the accounting or various users of the organization. It will help to, once it is provided them, for them it helps to make decisions on their areas. For example, what are the decisions made to be take by the owners? Owners, for him, what is the position of my company? Because he only invested money on the business concern. For him, it is very helpful to judging the financial position of the business concern, and also it allows to calculate the profit as well as losses of the business concern. Even the investors means the person who is going to be invest. They are called prospective investors of the business concern. For them also it is helpful to make the judgment related to profit as well as loss of the business concern. Maybe the income or source of the company here. What are the liabilities they already taken from the outside parties? Right? What are the obligations they have? And these are the points we have to take into account, consider while investing money on any business organizations. By seeing that accounting report or statement, investors also could take decisions. It is helpful for the investors, and same way it is also helpful for the creditors. Creditors are the person who is actually giving credit facilities to the business organizations. If they give or sell the raw materials or maybe any purchases done by the organizations, and if they want to go for credit, right? So before that, supplier has to think whether that person has capacity to pay that amount of money after the certain period of time. I think this is called credit worthiness of the company. Later, whether the company have or company is able to pay that amount of money, judging that is called credit worthiness of the company. Very important. By seeing the accounting report, credit worthiness of the company also can be easily judged by the different creditors of the company. So out of many accounting users, so they are taking very important role in the accounting report for the creditors or the owners, investors as well as the creditors. Right? So in order to take decisions as well as to disclose that accounting report to the various parties, in which the very important thing we need to discuss for here, it has to be understood by the different parties. Right? So, however, at last it has to be disclosed to the various parties. But very important thing is called it should be understood by the business different parties. Okay? What the report is submitted to the owner or to the investor or to the creditor or to the banker or to the tax department or to any community of the society. Right? So what we have reported them, what we have disclosed them, if it is understood, then only they could take decisions on the information of the accounting report. Right? So that is why, in order to understand the accounting information by various parties, what we recorded now, it has to be recorded with the uniformity as well as the consistency method of accounting. Right? Once we followed consistency as well as the uniformity method, uniform method of accounting or rules and regulations of accounting, then only for them it is helpful to understand as well as the taking decisions on the information of the accounting report. For that reasons, following some rules, following some regulations, accounting policies, procedures are also very important. So remember students, in this lesson, how the accountant followed various accounting rules, regulations, policies. Right? So we are going to discuss the same in your second chapter called theory base of accounting. Remember, all accounting activities will be done in the organization by the qualified person, accountant or chartered accountant, etc., with some rules and regulations of accountancy only. So what are the normal rules and regulations followed in the accounting world? These are going to be discussed in your second chapter called theory base of accounting. So we'll discuss first what are the need for theory base of accounting. Right. So accounting is just recording or is just identifying or monitoring or summarizing. Actually, this is not only called accounting. Before recording, before monitoring, or before summarizing or communicating, there should be some rules, there should be some policies, conventions, concepts, etc. If you follow, then only the clear picture can be given to the different users and they can make it to further use. Right? So that is why there is a heavy need of theory base of accounting. Right? And also, once we followed rules, regulations, and policies in accounting, then only it can be helpful to you make these two comparison. That number one is inter-firm comparison, and the second one is inter. First one is inter-firm comparison, and next one is inter-period comparison. Okay, remember here, these two comparison need to be made by the different users. Then only they can find the position of the business concern. Right? To judge the financial position of the business concern, these two comparisons has to be made. And in order to make these two comparisons, theory base of accounting is very important. Theory base of accounting is nothing but following of the rules or consistent methods or concepts or principles etc. are called here theory base of accounting. So what is called here inter-firm comparison? Inter-firm comparison means comparing the financial statement of our company to another company. This is nothing but here comparing two companies accounting informations. Then only we can decide here whether our company is the strongest company or in which position we have. What is the necessity of increasing or improving our efficiency? Right? In which area we need to improve. So these things can be easily done. Regarding that, easily the decisions can be taken only after making inter-firm comparison. This is the comparison of one company accounting information or financial statement with the another company. Then only for the investors or the owners and creditors, like many decisions can be taken. And also the next one more comparisons we have to make, like different users need to make, that is called inter-period comparison. Inter-period comparison means financial statement of this year, current year, if it is compared with the previous accounting or previous accounting information, then called inter-period comparisons. That is also helpful here, much needed for the judging the financial positions as well as the efficiency of the business normally during the current year. Right? So these two comparisons are very important. When we can make these two comparisons, if there is a similarity between the accounting information of our company to another company, if there is a similarity or consistency or uniformity between the accounting information of our company of the present year with the previous year, right? So then only these two comparisons can be made by the different users, right? So for that reason, to maintain the uniformity or with the consistency as well as some reliability, theory base of accounting is needed for the accounting transaction. Theory base is nothing but following the rules, regulations, policies, concepts, conventions while recording or preparing the books of account called the theory base of accounting. Okay, this is the need for preparing the theory base of accounting. Next, I'll go for the what are the concepts of accounting as well as how the concepts are related to accounting work. Okay, so we'll discuss now here what are concepts, what are conventions, how that concept, principles of conventions are related to accounting with one sided thing, that is gap. After discussing need for theory base of accounting to make various comparisons, accounting information has to be maintained with some uniformity, consistency as well as the reliability, right? To maintain those, that every accounting procedures should be based on some theories. Those theories are called accounting principles, concepts, conventions, rules, regulations, etc. In those rules, regulations, highly taken into account called gap. So what is gap? Gap means generally accepted accepted accounting principles. Accounting principles. Gap means here generally accepted accounting principles. It refers to the rules or guidelines which adopted for the recording as well as preparation of financial statements and to bring the uniformity as well as the consistency in the books of account or accounting were called generally accepted accounting principles. What is called GAP or generally accepted accounting principles? In order to maintain the uniformity, consistency as well as the reliability in the books of account or preparation of finance statement of the organizations, some guidelines or rules has been adopted. Right? Those are called generally accepted accounting principles. Normally, that principles or the rules or guidelines which are accepted by the accounting professionals. Right? So in India, even out of the country also, there are accounting professionals, accounting bodies, right? So they all accepted what are the rules or regulations or guidelines which is needed for the preparation of financial statements of the accounting work. So what are the rules, regulations which we normally adopted in the preparation or in that process? They all called generally accepted accounting principles. Right? Whatever the rules, it should be followed by all the industries. Right? So A to Z, whatever the industries are preparing accounting work actually, they supposed to follow these accounting principles. For that reason, all the principles are called generally accepted accounting principles. Then what is called accounting concepts? I told you accounting concepts, principles, conventions, all are called here gap only. So then what is called accounting concepts? Accounting concepts are the fundamental ideas or basic assumptions underlying the theory as well as practices of accounting. Right? So while studying theory as well as converting into practices, right, what are the fundamentals idea or basic ideas we follow? They all are called accounting concepts. Okay, while making study of theory as well as practices of accounting, what are the fundamental ideas as well as the assumptions adopted is called accounting concepts. Okay, so accounting concepts are playing very important role in the every business organization during the process of accounting. Next is the accounting conventions. One more gap, that is called accounting conventions. What is called accounting conventions? They are the customs or traditions followed by the accountant as a guide in the preparation of financial statements. Not only while preparing financial statements as well as the various books of account, not only basic ideas or fundamental assumptions, there are some customs, there are some traditions which relate to accountancy. If it is followed, then called accounting conventions. So accounting concepts as well as accounting conventions are normally accepted by all accounting professionals, and inclusion of or together of both called here generally accepted accounting principles. So and the study of those principles as well as the concepts or conventions is called theory based of accounting. Accounting is nothing but preparing the various books of account. To prepare various books of account, some rules, some principles, some concepts, some conventions are followed. Study of those called theory based of accounting. Okay, so now I am going for the what are the various concepts of accounting. Then what are the concepts need to be followed? Right? If the concepts or the theory is best or strong, then we can do anything in accounting transactions. Correct. So that is why we discuss now here what are the accounting concepts. So the concept is now accounting concept. I have told you already the meaning of accounting concepts, and we see which are the accounting concepts taken as theory for the accounting. So the heading is accounting concepts or concepts of accounting. Just now I told you the meaning of accounting concepts. Accounting concepts are the fundamental ideas or assumptions which followed or adopted during the process of preparing the accounting work or preparing the financial statements, and which is accepted by all accounting professionals called accounting concepts. Accounting concepts are the fundamental ideas or assumptions which is followed by each and every accountant in the process of accounting called accounting concept. And there are many accounting concepts, right? So out of which nearly 12 to 13 concepts which is there in your textbook in your second chapter. So we'll see one by one, and if you understand all the accounting concepts, then third chapter onwards, that problematic part you can easily understand as well as the solve it. So students, next chapter onwards you will be having some illustrations or problems, and to make it solution, right? So that theory is very important, especially all the problems or illustrations or practice of accounting is based on these accounting concepts only. So we'll see one by one here which are the concepts helpful for the practices of accounting, out of which the first accounting concept is business entity concept. Business entity concept. Okay, so in the last video I have told you one of the basic term of accounting, that is called the business entity or entity, right? So what is the meaning of entity? Entity means that recognized or identified name of any organization or institution which is actually taken for the preparation of various books of account of the business organization called entity. It is nothing but separate individual existence or will be recognized name of the institution called business entity. So it has to be, right? We have one concept related to the business entity. It should be followed at the initial stage of all the accounting process. Let me see what is called business entity concept. This says actually all the transactions of the business enterprise or business organization will be recorded in the books of account, not with the name of the owner, not in the name of the owner. It is in the name of the business entity. Business entity means with the name of the institution, right? So the same thing I have explained in the meaning of business entity also. If it is followed as the concept of accounting or theory for accounting, then it is termed as business entity concept. I repeat, business entity concept is one of the concepts in which the transactions of every business organization which is going to be recorded in the books of account are recorded with the name of the business or in the name of the business organization, not in the name of the owner. Here, in the accounting process, we have to make a separation of owners as well as the business organizations. Okay, whatever the things we normally do related to business, we have to consider they are the things of business organization, not the things of the owners. Right? Whatever the transactions which belongs to owners, it is separately recorded and treated as he is one of the member of the business concern. He is just the proprietor of the business concern. So everything, what are the liabilities, or assets or revenues or incomes or profits or drawings, whatever, it has to be recorded and termed with the point of view of a business organization only, not with the name of the owner. Owner is the person who invests capital on a business concern, and later the business has an obligation to pay that amount of money returned to the owner, and the owner has rights to take the profit from the business organizations. Apart from that, everything will be taken into account or considered or recorded with the name of the business only. So that is why in accounting we have to divide, or we have to make a separation between the business as well as the owner. There should not be here togetherness while preparing the statement or while preparing the accounting work. So this is called business entity concept. Whatever the liabilities of the business concern, profit earned by the business concern, or the loss which gained by the business, which says actually it is the part of business, which is the point of business, not the owner. Right? I conclude the meaning of business entity concept with the in business entity concept, everything is recorded from the point of view of business organization, not from the point of view of owner. Owner is the person who actually invests money on the business concern, and the business has an obligation to pay it back or return it back to return back to the owners of the organization. This is about business entity concept, and while preparing the accounting work or while making financial statement of the organizations, the accountant need to remember and follow the business entity concept. Okay, this is the first accounting concept. And second one is money measurement concept. The second point is called here money measurement concept. Money measurement concept also, by explaining the meaning of accounting, and bit a small thing I have explained that. What is called money measurement concept? I told you the transaction which is going to be identified as well as recorded in the books of account, and it should have monetary terms. Right? The transactions has capacity or capability to fixing the money. Right? Then those only recorded or taken place in the books of account. The same it is called. Following of same is called money measurement concept. Means according to this concept, if the transaction has money, then only if the transaction has a value of money, then only it is taken place or recorded in the books of account. Moreover, before recording the transactions, we have to give the prices, we have to give the values. Right? If the transaction is able to fix if the accountant able to fix the values of the transactions, then only it is taken for the accounting activities and also for the calculation of profit as well as the losses. So only those are taken into account. The following of such a thing is called money measurement concept. Okay, we can also say here the transactions or activity which should not be covered with the money or exchange of money will not be recorded. For example, appointment of a manager or assignation of any employee, disputes among the people, or meeting conducted by the manager or the managing director of the organizations. These are also called as transactions of the organization or activities of the organizations, but will not be recorded as accounting transactions. Maybe maintained somewhere in the business organizations, but they are not written as monetary transactions or accounting transactions, because in accounting we are supposed to follow one of the principle, that is money measurement concept. According to this, the transactions has monetary values, then only it is taken as accounting transactions. This has to be followed in the accounting work. This is the second, principle or concept of accounting, and the remaining we'll discuss in the next class. So there are many accounting principles here, so we'll see in the next class. Thank you, students.